from the heart of Dubai, where tomorrow is being built today, to the world. Welcome to the CTO Show with Mehmet. Here, we redefine technology and reimagine possibilities. With Mehmet, delve into the riveting realms of AI, cybersecurity, and digital technology. Experience the thrilling highs and lows of startups. Immerse yourself in the spirit of entrepreneurship and witness the future of business innovation being written in real time. Now, without further ado, let's tune in and explore the future.
Hello and welcome back to a new episode of the CTO Show with Mehmet. Today I'm very pleased. Joining me, Gabriel Jarrosson. He's founder and managing partner at Lobster Capital. And as you can imagine, Gabriel is an investor. So the topic today is a lot about investment, especially in the tech startups. Of course, the way I love to do this, Gabriel, I don't waste much time of my guests. I want you to share as much as possible. So the first traditional question is a little bit more about you, your background, your journey, and what brought you to start what you're doing currently.
Well, thank you so much for having me here on the show, Mehmet. I'm glad. My background is computer science engineering, but mostly entrepreneurship. I've built in my past, before being an investor, 7 startups and
Wow.
sold 3, which means I failed 4. But I was fortunate to sell 3. That's how I came to angel investing, because I had a little bit of money from the exits, but mostly because I had started all of those startups. I was seeing in other startups either the same mistakes as me, and I thought, oh, okay, I know, I've lived this journey, this mistake, I know where you're going. But sometimes I would see startups doing much better than me. For some reason, they're probably better entrepreneurs. They're not doing the same mistakes. So I thought, okay, those guys are onto something. And that's how I started angel investing in 2013, quite a while back. That angel investing did quite well. I was investing in Europe originally, where I'm from, and I decided to transition to invest in Silicon Valley, where the deal flow and exits are better. I transitioned from just angel investing to bringing people along with me. First, as an angel syndicate, doing SPVs and deal by deal. That's
Mhm.
when I started investing in Y Combinator, the best startup incubator in the world in San Francisco. And now, since 2023, I run Lobster Capital, which is a traditional VC fund on the back of all the investments we made, all the success we had, and of course, to have many, many more as well in the future.
Great, and thank you, Gabriel, a lot for being here with me today. I gotta come back to YC and ask you about the investment, but starting from your journey as an entrepreneur, right? You bootstrapped a company to 1 million ARR, right, with 0 employees.
Yes,
This
and
is
zero co-founders, just me. Before
just
AI,
you.
before AI.
Yeah, so that was long time ago.
Yeah.
Now, what kind of mindset you think you adopted that helped you also to achieve this? Because I hear a lot from other to be founders or existing founders, like it's hard, like we need this, we need that, like and we see them like trying also either to bring a co-founder with them, or maybe they start to raise money early. So for you, what really worked? What was the mindset that made this happen?
Yeah, I love that question. First of all, obviously a lot of ambition. You don't grow if you don't want to. So I wanted to create a big business. I was hoping it would get too much bigger. Actually, in the world of YC today that I live in, 1 million AR, it doesn't seem even that big anymore. At the time, it seemed huge. So that's one thing. The other is, don't wait, don't ask for permission. Just at YC, people say you can just do things, and I love that. You can just do things. So I probably would have loved to have a co-founder, but I didn't find one. I was like, okay, I'm gonna just keep going anyway, and just keep building and find solutions. Maybe you want to build a technical product. That was not the my case originally with that business, but at some point I needed to build the tech. If I didn't have a technical co-founder or a CTO, the CTO show,
Yeah.
then I outsourced it. I was like, okay, well, I wish I had a CTO. I don't have time. I haven't found one. I'm gonna outsource it. So the first thing is, I see today in my seat as an investor, so many entrepreneurs say to me, "Oh, if we only raise that money, then the business is going to be successful. But as long as we don't raise, we're stuck." I think that's a big mistake. So, yeah, that's the first thing: is don't ask permission, don't wait for an investor, just run your business. And I always tell my founders, the best money is money from customers, not money from investors. So let me take an example. If you want to raise $1 million, you can just spend your entire time talking to investors, hoping maybe they will give you $1 million, or you can spend your entire time selling. And if you do really, really well, at some point you can sell $1 million, and that's much better because the result is the same. You have $1 million in your bank account, but if it's from customers, you haven't given away any equity. You still own your company 100%, and you have a growing startup. When you raise 1 million, you still have $1 million in your bank account, but you've given up your equity and you have no revenue in your startup. So, you still need to do the work. And people think money solves everything. Oh, I'll have money. It's going to be so easy to solve customers.
Mm-hmm.
That's very, very wrong. Money can help sometimes, maybe to pay for some ads or something, but there's no magic bullet. There's no silver bullet. Um, to finish answering your question, it's kind of a long answer. Sorry, but the
No
second
worries.
part, yeah, thank you. The second part of how I did this was very early on, 10 years ago now. I already thought of either delegating a task to a human, but that's costly, or delegating a task to a computer program. That was not an AI, but so I kept building systems that could handle my business for me. If it could not be handled by a program, I would give it to a human, but I would also change my business and force my customers to change their behaviors so that it would fit something automated. So I'll give you a very simple example. Many customers wanted support, wanted help with using the product. And so I was doing it one by one. It was not scalable. It was taking a lot of time. I had to hire someone. That was not great. And then I had this idea. I was like, I will do an office hour every week, 1 hour a week, where it's a Zoom call. Everyone can, because I realized everyone has the same problem. So everyone
Mm-hmm.
can come on the call, and then everyone can talk about the problem they're having, the issues they're having. And then I would record the Zooms, and then every 5 minutes I answer a specific question, a specific issue, sometimes sharing my screen. I would clip that and then put it into an FAQ. And then when someone had a problem, I was like, hey, read the FAQ. Probably I know because I've done dozens and dozens of office hours. Your issue is probably there. And if it's not, you can come to this office hour just once a week. So instead of taking me 10, 15, 20 hours a week, it would just take me 1 hour a week. And over time, I would build my library of content to a point where at the very end, every single question possible was solved. I didn't need to do the office hour anymore. So, always change your customer's behavior, automate, delegate, and use computer program or software. And today it's so much easier with AI. So yeah, I think it was an interesting thought process for me to do that, and I had a lot of fun.
Cool. Just as a follow-up question on this, Gabriel, do you think, because you mentioned like with the AI, now the path of, let's say, if they find product market fit, if what they're building really is something customers want, do you think scaling this, in a compounding way, relying on AI is something feasible, or like do you still believe as founders they need to um you know get like at least when I'm talking scaling, I mean they have a lot of customers now, so they need like kind of customer success. I'm talking here in the B2B space, of course, or maybe in B2C it will be like customer support and all this. Like what do you think is the limit of using AI? Because sometimes relying also on the AI completely, it might like little bit people would not like it. They would need still to speak to a human. So where do you think is the limit, or like what setup, the best practice, let's call it, in relying on AI during the scaling phases?
I mean, I believe we don't know the limits yet. Something you have to remember is AI, as we know it today, is the worst it's ever going to be. Like, so it's only getting better and better every week, every month, right? So I don't know the limit because the limit today will be completely different in 3 months already because it's moving so fast. So that's one thing. Y Combinator famously predicted already last year, or maybe at the beginning of 2025, that they would be building a $1 billion company with just one person,
Yeah.
just one founder, $1 billion company. And then later on, they also predicted they would build a $100 billion company, so 100 times bigger, with 10 people, which is, 1 billion with one people is 1 billion per person, but 100 billion with 10 people is 10 billion per person, even bigger. So, and it seems crazy. It seems impossible. Today, it probably is, but AI is evolving so quickly and solving so many problems that I think it's maybe possible in the future. So, I would say best practice is look for where today AI is as good or better than humans. And in many cases, it's just better. If you think of customer support on the phone, if it's only humans, you wait for 10 minutes to just speak to an agent. But if it's an AI, it can just speak to you right away. And there are now some companies that have very low detection rate, which means less than 1% of people detect it's an AI. They think they're talking to someone and it's really solving their problem, etc.
Yeah.
So if the solution can be as good or better, that's a good way to implement. If the solution is slightly worse, but it's improving rapidly and it's saving you a lot of time, maybe acceptable. If the solution is not good enough, just wait. But what's important, I would say, is revisit every 3 months. So many people just and still today, like I see some people not in Y Combinator obviously, but in other parts of the world, who say, oh, I tried ChatGPT, it made a mistake, and so I'm not using it, it's useless. And
Mm.
like, you tried it in 2023 and now it's very, very different, and also you have to learn about prompt engineering, etc., etc. So every 3 months try again. And I see some YC companies do it the other way, who say, I've met a founder who said, "Oh, I had this idea, but in January I just couldn't do it. The AI couldn't work. But then I came back in May, and everything was possible. Only in four
Mhm.
months. So revisit frequently."
That's a great advice, Gabriel. Now we're talking about Y Combinator, aka YC, right? Now, first question, Gabriel. Like, even when you shifted from being an entrepreneur after your successful exits, you start as an angel, and then syndicate lead, and then now with a full-fledged VC. Why Combinator? Why YC? Uh, and let me ask the question in this way: what's special? Like, why we see the success? Of course, not everything coming out from there succeed necessary, but everyone want to be part of the investors who put money in YC graduates.
Yeah, YC is very, very special. So for people who don't know, YC was created 20 years ago. It's a incubation program where startups come and they are incubated for 3 months. And at the end of the 3 months, they have a demo day where they present to investors and raise money. And so it has created 120 unicorns, including Airbnb, Coinbase, Dropbox, Stripe, Reddit, DoorDash, Instacart, etc., etc. You can find this online. So my story, I grew up in Paris, in France. And so when I built my businesses, they were French businesses. And when I started angel investing, I started angel investing in France. That was my
Hmm.
network. That was where I lived at the time. I'm based in San Francisco now, but that was where I lived at the time. And I was, as you can hear, I can speak English, but I was only keeping tabs on the US ecosystem from afar. I was
Hmm.
just like, oh, let me just see what's going on there, and investing in France. But after a few years, after a while, I had an epiphany. I said, why am I investing in tech in France, where it's, or in Europe, where it's not the best market? The best market for tech is the US. What's keeping me from investing there? And so I just booked a plane ticket, literally, and went to San Francisco. I had been to the US many times, but not to San Francisco. So I just said, let me go to San Francisco and have a look. And then there, I was talking to people, asking around, what's the best deal flow? Where can I get good startups? And people told me, oh, you can check incubators, and the best one is YC.
Mm.
So there's the whole notion of how do you get access to YC and are able to invest, and that's what I did in the last 10 years. And we could get into that if you want. But YC is the best. Um, and so you ask me why is it the best and why does it work so well? First of all, because it's the best and the biggest brand and the most famous and renowned, everyone wants to go to YC. So every talented entrepreneur, or not every, but most talented entrepreneurs apply to YC and try to get in, and they only accept less than 1% of applicants. So today it's harder to get into YC than to get into Harvard. Just to say the level of selection is pretty insane. And so it's attracting a lot of talented people. And you can always ask the question, are people, if you think of Harvard, for example, that I just mentioned, are people smart because of Harvard? Or is it because they were smart before that they went to Harvard? And it's the same thing for YC. Is it YC that makes them good? Or is it because they were really good already that YC accepted them? And in both cases, with Harvard and with YC, the answer is both. So already they have very talented people who just come and join the incubator. So that's one thing. And then the program is designed in a way where it's extremely intense. It's 7 days a week, almost 24 hours a day. So a lot of pressure and peer pressure from your other batchmates. So people build and ship extremely quickly. So there's a huge velocity and sense of urgency. That's one thing. And the other is you get access to the best entrepreneurs in the world to come physically coach you, talk to you about their success, and just help you. And so Brian Chesky, the founder of Airbnb, comes to every YC batch and just tries to help. Sam Altman, founder of OpenAI, he was previously president of Y Combinator. He comes every batch and to help. The Collison brothers, founders of Stripe, come and help. So if you're in a program where everyone builds so quickly, and then your mentors are all of those billionaires or deca billionaires who build amazing companies, who come back and help you and tell you how they did it, the results are amazing. So yeah, that's YC in a nutshell.
Absolutely. It's sad also, Gabriel, like you talked about you being in France and, went to the Bay Area. Sometimes I feel the same here in where I am. I'm not saying that there are not great builders here, and just copying the idea of something like YC it doesn't work simply because you know it's my humble opinion. Just creating a place, calling it incubator, and just try to mimic doesn't work because there is this whole ecosystem support that you just mentioned that make things works in my opinion.
I agree. Many people have tried to replicate YC in Europe, in Asia, everywhere in the Middle East. And still today, I hear, oh, this is the new YC for the UK. This is the new YC for Saudi wants to have a new YC, etc. It doesn't work. I think I don't think it's impossible in theory, but YC is not in a vacuum. Is in a big tech ecosystem of other founders that are not YC, other VCs, and etc. etc. 25% of all startup financing in the world, 25% happens in San Francisco. Like one city is a quarter of the entire startup investing scene. So it's insane. If you're not in San Francisco, you're not there. And it's so easy for anyone to jump on a plane and move to San Francisco. It's so easy. And if you're accepted into Y Combinator, then your visa to stay in the US is relatively easy. I don't want to say
Right.
it's guaranteed, but it's quite
Yeah.
easy because you've been accepted. So people often ask, oh, what's the Y Combinator of Europe? What's the Y Combinator of Asia? The best, or of the Middle East, the best founders from there just go do the real YC in San Francisco. They don't need to stay locally. San, you know, the US and San Francisco specifically is a magnet for talent, and it's just so easy to leave today. I mean, and by the way, that's the strategy that Dubai did, and all of people who don't want to pay taxes move to Dubai because it's just so easy to move. That's just for
Right.
taxes purposes. If you want to build something big, same thing, but you move to San Francisco.
Absolutely. And just to add on this, and I keep repeating this because, sometimes I share my own thoughts on the topic on my LinkedIn and so on. So it's exactly, what, as people in the valley, they call it, the flywheel. And then, like, you have these people who are willing to help. So although, like, we had like some unicorns coming out from this region, but I tell them, guys, like, I didn't see, like, only except one or maybe two people that I don't know personally, but they are very well known people. Like, one is started a VC, and another one tried to run, something similar to YC. But I mean, if we don't do this collectively, and this is the whole thing now, YC is also very well known to have like a lot of, the great founders that you mentioned, Gabriel. So two things I want to ask you, but one by one. So first of all, um, what have you noticed any? You mentioned, the skills and these guys and the intensity over there, but I mean these founders usually that get accepted to YC. Have you seen any patterns getting repeated, over there? At least maybe in the ones that you invested in.
Oh yeah, even in the one that I don't invest in all the companies. I
Sure,
invest in the ones that I consider the best, that are the best. But yeah, there are many common traits to YC founders. The biggest, most obvious one is they're all technical. They're all technical, and what I mean by that is it doesn't have to be 100% of all the founders, but all the teams are technical. So you need to have at least one technical person on the team. If it's a two-person team, it's at least one of them. Actually, in YC, very often it's actually two out of two. If you have a three-person team, it's probably at least two of them that need to be technical. And again, very often in the YC, it's the three of them. So it really is a place for geeks. And I'm not saying geeks in a bad way. I'm saying geeks in a
sure.
very good way. Like if you're not a geek, you probably don't get into YC. So that's one thing. And so same thing. I see many, many, many founders who are not technical and they're building a tech product. And a tech product could just be an app or a website, but yeah, that's still tech. And they find a co-founder who's also not technical. That's not a great idea. You need someone to actually maintain, and they always tell you they have solutions, they will hire someone and they will go through an agency. Like, well, that doesn't cut it at YC. So that's one thing. The second thing is YC founders are pretty young. um
Mhm.
that's so there's lots of studies that actually say the sweet spot is closer to 30 than 20 to have a successful company. But many YC founders are very young. I just spoke to a team of three. They're 21, 22, and 22, and their business is exploding. And many great unicorns were built by very young founders. Mark Zuckerberg was 19, I think, when he started Facebook, etc. So um, they're quite young. Uh, People say it's a no one confirmed or denied it. People say YC likes young founders because they can mold them easily with the YC model. That might be true. Um, and so, what's the YC model? And so, what's the another common trait that they all have is maniacal sense of urgency. Just
Mhm.
and that's what happens during the batch. Like I said, for 3 months it's 24/7, and people are crazy in a hurry, and like people don't sleep. Like those 3 months are crazy. Like people don't sleep and work 7 days a week, which I don't necessarily recommend, especially in the long term. But for that short amount of time, yeah, sure, why not? You just
Sure.
you do it 100%. And so big sense of urgency and big resourcefulness. And by that I mean, people don't mope around waiting for problems to solve themselves. People just do things. A lot of people say founders with a lot of agency. So
Mhm.
whenever there's an issue, you just fix it. You figure it out. That's it. It's your job. Like no one's gonna hold your hand. No one's gonna tell you. You just figure it out. And like if you have a customer, they're all in San Francisco, but if you have a customer that's in New York and that wants to see you tomorrow
They will
to
fly.
sign a contract, you jump on a plane and you don't complain and you just do it. And if you don't sleep, you don't sleep, but you just do it. So that's very inspiring. It's people who really want to win, who really are extremely motivated, and for this short period of time. And again, I believe very strongly in work-life balance. I don't believe life should only be work.
Right.
I have a very amazing work that I love and I do spend a lot of time on it, but I don't believe life should only be work. But I think for those 3 months of YC, almost nothing else matters. You only focus on, and that's why also being young is helpful, because you usually don't have a family, kids. When you, if you, you know, I'm a father now. If you have kids, it's harder to say, okay, I'll see you in 3 months. I'm just gonna go work. Um, so that's all. That's all. That also helps. But there are some parents in YC, and they manage it. And but yeah, for 3 months it becomes your priority. So that's, I think, very inspiring to see. Those are some of the common traits that I can think of.
Great. Now, let me ask you, and I know some people who shared like what happened usually in on the demo day, right? And the demo day is, by the time they graduate, YC invite like even VCs and other investors to come and see. Now, other than the atmosphere, like for you, Gabriel, what makes you all of a sudden say, hey, 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 stop. I need to see these guys. You know, we need to talk. Like, what's like couple of things that would attract you during the demo?
Yeah. So yeah, demo day is just insane. It's in San Francisco. After every batch, everyone's in the same room, and the energy is insane. First of all, it's really cool. To all of those talented founders are here, and many investors like me who are very passionate about YC as well. So I mean, I believe your question is like, what makes me excited? Why would I want to go and talk to a founder?
Yes.
Um,
Any framework you have, like for example, maybe okay, if I see this and this, I will stop and I'll say, okay, I need to talk to these guys.
Yeah. And by the way, I want to say we're very lucky that we know many of the founders before demo day, because
Mm,
we're very active in the community. We meet them at events. We meet them online. We're a very active. We have a very big online presence. Lobster Capital is also a media brand, and so we have a podcast called the Lobster
nice.
Talks, where YC founders come and tell their stories. So sometimes I meet them before because they just come on the show
Oh,
to tell.
nice.
Anyway, so just to say, like, I usually don't discover them at demo day. We've had a relationship for a while with usually all of them. But that being said, yes, we do have a framework of selecting startups. What we say to our investors, what we say on our website, etc., is we will select the top 2% of every batch. And so, what do we mean by the top 2%? There's We have a lot of investment criteria, and if I have to go into all of them, we need another extra hour. So I'll go to the
Sure.
the short ones. The main two that we over index on, that we really are important to us. The main two are, first of all, the top 2% of the best teams, the best founders. At seed, founders is almost everything. So what are the best founders? It could be repeat founders. If they already had an exit, it's even better. So if you've done it before, you're not going to do all the beginners mistake. It could be founders who come from big universities. For example, it is studied and known that the university that created the most founders of unicorns is Stanford. So if you're a Stanford grad, your odds of unicorns are just better because it's Stanford. Sorry. So if we see a Stanford grad, or MIT, Harvard, whatever, that could be top 2% of teams. And then if you come from a big tech company, a famous big tech, so if you've worked at Google before, if you worked at Meta, if you worked at SpaceX, etc., those jobs themselves are extremely difficult just to get. There's sometimes 10, 15 different steps to actually get hired, and interviews and such. So if you've made it, it means you're already probably someone exceptional, and those companies are doing great. So what you learn there, it's probably very interesting as well. So
Great.
that's top. Yeah, sorry, go ahead.
No, no, no. Please go. Continue,
The
Gabriel.
second thing, and that's it. I'll stop. So that's top 2% of teams, and then top 2% of early traction. So sometimes I think many seed investors, and I think it's a mistake. I think many seed investors fall in love with the team or with the idea. They say, "Oh, I would pay for this. I would need this, so I'm going to invest." But your judgment as an investor, or my personal judgment, isn't necessarily true. I can't predict the future. Maybe I like something but no one else likes, or vice versa. So our approach is very different. We say, "Hey, we're going to be very humble with what we like and don't like. We're going to let the market decide." So if the company has a product that we think is great, but no one is buying it, they don't have traction, maybe there's something we don't understand, but we won't invest because the market doesn't like it. But if there's a product, we like it or we don't like it, maybe we hate it, but the everyone is buying it, the market loves it, then we're thinking, okay, there's something here. People love it. there's many things in the world that work really well that I don't like. I don't like, I don't know, Labubu, but Labubu has a huge success and people buy them. So it's a good business, even if I personally don't like it and don't care for it, right? So that's our approach. We invest in the companies that have the most early traction, that have the most, we could say, product market fit or pull,
Right.
but that's usually the companies that have the most revenue, just because they've been able to sell very well very quickly. So it demonstrates product market fit. It also demonstrates how good the founders are, because you don't get to 1 million in revenue in 3 months by chance. You have to be
No.
extremely good. You need to build something great. You need to know how to sell it. Like it solves a lot of the underlying issues of early stage startups if you already have great revenue. So that's how we invest.
Great. Now, you mentioned about like you already meet some of the founders beforehand, on the podcast and so on. But does that help when it comes, for something which might become very competitive, where a lot of other investors want their pie in that round? And, because I know this and I learned it, through some programs I went through. Like, also, people think like deal flow is easy, but sometimes it's the opposite. Like, you might have the deal flow, but, someone else is taking the bigger pie. So how do you try to consistently get into these competitive rounds, other than knowing maybe the founders?
No, you're absolutely right. YC itself is quite competitive. There's not always room in the deals that you want to get into, and because we focus on the companies with the most revenue, it's arguably even harder to
Right.
get into those rounds. So, um, you know, we we're very proud that we have a very 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 high conversion rate or investment through rate. So when we want a deal, we almost always have it, and when I say almost always, it's over 95% of the time.
Nice.
And so that's for a number of reasons. One, we're YC specialists, so we understand YC, we understand how it works, and founders appreciate that compared to a fund that does YC and does everything else. And so they don't necessarily know how it works at YC, because YC, they do things differently than everyone else. So we know all those rules very well and we play by those rules. So that's one thing. Second, we're very founder friendly. We're giving them quick answers. We don't waste their time. We're also providing value and helping. So, money is just a commodity, but what are you bringing on top of the money? Well, I'm a 7-time founders and I failed 4 times. I learned a lot of things that don't work and I exited 3 times. And I've learned also, how to build a business and sell it. So I come in and help them specifically with, hey, this is what you need and how I can help. And I've also invested in more than 100 YC startups now. So I see a lot of things from my portfolio companies of what they do that works, what they do that doesn't work, what they don't do but they should have, etc. So I can help everyone around. So that's the second thing. On top of that, YC has an internal rating tool called
Mm,
Bookface, where every investor is rated. So if you're helpful, you're going to have a high grade. If you're not helpful or wasting their time, you're going to have a low grade. And so, because we've been in this community for a long time providing value, we have a high rating. So founders know they should take our money. And the last thing is the media brand that we have.
mhm.
Today, we have around 1 million views per month. We're growing that very, very rapidly. I think we're going to be at 10 million views per month next year. But today is 1 million
Nice.
views per month. And so that's something that I offer to my portfolio companies. I say, hey, uh, instead of just bringing money, we'll invest. Then I can help you as a founder. But then you can come in our podcast, but in our media channels, newsletter, social media accounts, etc. And I can promote you, either your services, or if you're hiring, I can talk about the fact that you're hiring. I have 44,000 followers on LinkedIn, so I can just repost to my network, and then people are gonna be like, "Oh yeah, sure, I would like to apply," etc., etc. So this
Nice.
media that we built is very helpful for those startups, and it's only the beginning. We started this in 2025. It's already at 1 million views per month. Like I said, I think we're going to 10 million views soon, so it's going to be even more useful to them.
Just on this, Gabriel, and this is a question I didn't prepare previously. um, I have a feeling that such approach is super helpful, especially,
Me
you
too.
know, the go-to market is changing big time. Whether in, especially, I can talk about B2B. This is my experience, and like it's about visibility. It's about building the brand both personally and for the company. And I know you're doing it. I know a couple of other guys in VC, they're doing it, and I think they are leveraging this big time, which also, now I don't have that yet. I mean, as an investment, but I mean, I've seen it beforehand. Even I'm a humble podcast host. Like, I can't claim I have the millions yet, but even though I've seen like people who get connected, or I connected them through the podcast somehow, because one guest, someone reach out, okay, can you do an intro here, can you do an intro there? So think about it, even for me on a small scale, how sometimes it's helpful. So I'm thinking, like, when you have that huge reach, this is kind of a ads on steroids, I would call it. And of course, it's
And it's
it
free.
must
I
have
mean,
been helping.
yeah, yeah.
Exactly. I don't want to
It's
say
not
it, but
free because you work for it. It's not free, but it's not ads. VC is evolving into media, I believe. Some people have understood this. The biggest example is 20 VC. Harry Stebbings built
exactly.
one of the biggest European VC. I believe he was 28 last year when he raised 400 million. One of the biggest European funds on the back of a podcast, number one VC podcast in the world. So he proved that, and then A16Z now said they're building a huge media company where
Yeah.
every single portfolio company will have a voice and will share content. So content is everything. And actually, if you look at VCs in the US, they almost all have a podcast today. It's very popular. It's very easy to set up with tools like these, etc. Almost everyone has a podcast, but they usually don't take it seriously. Uh, you know, it's hard to do podcasting and to do it well. So they record one episode a month and then they publish it and that's it. And it gets 20 listens from mommy, daddy, and baby brother, and that's it. And because they're not thinking of making interesting content, and they're not promoting the podcast and repurposing with short clips, etc. Like, it's a full-time job. Um, I'm social media native. I've been on social media since 2007, I think.
Mhm.
I've built a big YouTube channel before in French, which is
Nice.
abandoned now. But I was a big YouTuber in France around startup investing. Same, my passion. Um, so, like, I'm native. For me, it's easy. It's a game that I know, that I love. I love being here doing this. Um, so yeah, it is a huge advantage. And again, we've only done 1%. Like, we're gonna grow. I started this in 2025. It's been only a few months. We're gonna grow
Wow.
exponentially more. Yeah.
All the best with this, Gabriel. And
Thank you.
kudos to you and to everyone who does this. So yeah, you mentioned about the 20 VC. There's I don't want to spell names wrongly, but yeah, there's Brian Bell also from Team Ignite Ventures. I know, like, he does a podcast also as well. Plenty of other people. Just fun fact about the podcast. So I've started it, and the concept was different. I pivoted. It's like a startup for me. Um, to your point about, like, how they do one and then they give up. So I tell people, if you're planning to do something like this, especially around startups and helping founders, or maybe you want to do something for investors, like, don't overcomplicate things. And maybe Gabriel can add any you know your experience on that. Don't overcomplicate it. Like, you don't need the fancy studio and like all this, because what people told me, that when they try to start podcasts, they give up because it's a lot of work, as you said, and they saw it as a cost more than this. And I said, guys, like, look what I did. I did it out of a passion. As you said, I'm not saying that there was no cost associated. Of course there was cost, but I mean, I kept it nimble and humble, and still I do it, I run it the same way, but I start to see the result. Of course, I'm not as fast as you, but things can grow only if you have the passion for it, and if you give it the time. Like, you can't just pump things and expect it to grow, and then you leave it, and then you see like a number of listenership goes down. I don't know if you want to add anything around that, Gabriel.
Yeah, I mean, I've been, creating content professionally for almost 10 years. If I started on YouTube in French in 2017, so it's almost 10 years creating content. On that French YouTube channel, I've published 1,200 videos in total. So like I've done a lot. I would say I think your point is correct. Many people don't even start or give up quickly with content. The ideal is to have quality and quantity. But if you can only choose one, usually people choose quality, and I would choose quantity. I think it's better to have regularity and post every week for 1 year, 52 times, of something that it's not perfect. You don't need to buy this. You can just do it with the microphone from your computer. You don't need, a fancy setup, a fancy editor. Like, you don't need to spend $1,000 per video. You can just do it yourself with very, very minimal editing. You don't need, of course, when you see other YouTubers, they have fancy effects on the screen and titles and intros and outros and blah blah blah. Like, you don't need all of that. If you're saying something interesting or something that your audience is interested in, that's enough. So you can literally take your phone, shoot yourself like this. Hey guys, that's me. No microphone, no nothing. Everyone has a phone, but
Right,
I would say do it every week. Do it 52 times before investing a single dollar. Like, this is free. Then you edit the video on your phone. It takes 15 minutes, and of course, the first few times, it's harder. But then you understand it, you get it. You can find a tutorial on YouTube, whatever, and you publish it. You do this.
right.
But how many people here published 52 times in a year every week consistently? Very, very few. And
Very few.
then you
Yeah.
can invest. Then you can buy a microphone. And by the way, I a friend of mine was asking me this week. He was like, "I'm gonna get one. Is it expensive?" And I told him, "No, it's not expensive. I believe it's $400." And then I go on the website and I realize it's $170. Like, it's so cheap. Like 100. Almost anyone can afford $170 for a microphone. Microphone is very important because the audio quality. Anyway, so yeah, that's what I would add. Think uh, quantity and regularity over quality and budget, and then you can get started for free, but do it for a long time.
Right. I gotta go back to the investment a little bit, Gabriel. Now, you mentioned it's very hard to get into YC. We know, like
Oh yeah.
other other geographies, they might not have the full-fledged taste of YC. So, if someone, and I know, like, you invest mainly in YC companies, but if someone
Only in
comes,
YC companies. Only in YC
yeah,
companies.
only in YC companies. But let's say someone comes to you and say, Gabriel, I understand you don't, but I need your advice, right? So I'm a founder outside of Silicon Valley. What is my realistic path to become a YC kind ready company? What you tell them?
I mean, first of all, I've talked about the common traits of YC companies. So technical team,
Sure,
very relentless, and lots of like they just solve things. Um, you don't have to be in San Francisco to apply to YC. You have to be willing to come to San Francisco for the program, but you can apply
sure.
from home. So you can apply today. Um, if your startup is only for the local market of your country where you are, you're not going to be accepted. It has to be a product that's either for the US or for the entire world. There are a few exceptions. We've seen some YC companies doing products only for India, only for South
Hmm.
America, but mostly like 99% of the times, if you have your product needs to target the US market or a global market, including the US.
True.
Um, but that being said, around half of the founders of YC are accepted with only an idea. So you don't need more. If you're a good team and you have a good idea and YC likes the way you think about it,
Hmm.
you can apply to YC on the YC website. It's free. It takes around an hour, and it's actually every application. That's what YC says, and they're right. Every application helps you think about your own startup. So it's just also for yourself. Now, I want to say that while 50% are accepted with just an idea. Those are usually exceptional founders, like I said, who come from big universities, Stanford, etc. If you're not from Stanford or from SpaceX or whatever, then having some traction on your startup and some revenue
Will help.
helps get in. Because remember, YC's tagline is make something people want. That's what it is. So if you come in and apply to YC and say, hey, we already have 100, 1,000, whatever customers paying, people YC thinks, okay, they're making something people want apparently, because people. So your odds of getting in are much, much, much greater. So this is what I would say. I would say, hey, you can apply. It's free. You should do it. But if you get more traction and really have proof that you're making something people want, your odds of getting in are greater.
Right. Gabriel, I'm going to ask you a quick question before we come to the end. Um, we always say that, VCs, they don't regret the bad investment they do. They regret the opportunities that they
That's
miss.
true.
Did that happen to you?
Oh yes. Oh yes. Oh my God. I have a very, very famous story there. Um,
Yeah, please share it.
so, by the way, we also regret bad investments. I will say it differently. We don't regret either of them, because I don't regret bad investments and I don't regret the ones that I missed, because being a VC is an amazing line of work and you just need a few winners to do really well. So even if you miss some others you actually get, and it's a business where, especially in YC, like, it's a very good business, I will say. um, but I have a famous story of this French unicorn called Sorare. Maybe you've heard about it. Sorare is a NFT collectible platform for
Yeah.
soccer, or we call it football in Europe, and we call it soccer in the US.
Yes.
And so you can collect the NFT of Cristiano Ronaldo and Kylian Mbappe and etc. etc. And I met the founder Nicolas for his pre-seed round in 2018 or 2019. I think it's 2019. And so he gave me 150,000 euros allocation. He said, I will, you can come in for as high as 150,000 euros in the pre-seed round of Sorare. And of course, at the time, NFTs were not really a thing. It was pre-COVID. And so I didn't really believed anyone would collect NFTs of football player, virtual cards. I was like, that doesn't really make sense. And it was very
Uh-huh.
early. They hadn't even started. They had zero customers. They didn't make any money. So I said no. And of course, NFTs exploded during COVID. Sorare exploded during COVID. At some point, it was the highest valued French unicorn. It was valued at 9 billion euros. And so
Wow.
at that 9 billion euros, my 150K investment would have been worth 200 million. And so I missed it. So by the way, it turns out recently Sorare has been struggling a lot. Some people even said the company might not survive. Of course, Nicolas, the founder, said, no, the company will survive and we're turning things around and I wish them the best. I hope they do survive. But the company is in trouble now. So it's interesting how it goes like this and then,
Yeah.
but yeah, when I saw that and I realized, okay, I could have been sitting on 200 million euros right now. That does
That's really
something for you
nice.
for sure. It is what it is. And I'll tell you something else. I'm not doing. I'm not in this game for personal enrichment. I'm lucky enough that I have enough of what I need. I'm doing this as a mental game, and of course, I am interested in making money for my investors, because money is how we keep the score of what we do. And so, the more money we do to our investors, the better we do as a fund. So I don't want to say money is not an important thing in my life, but I'm not after personal gains in this. I'm more into the infinite mental game.
Right. Just as a reminder for people who doesn't know, especially maybe in my region, because I know there's still a confusion. Guys, VCs are not like single people who are rich and just they get the check out of their pockets and pay. So they have limited partners. So this is actually how the fund is formed. So it's not their own money. Maybe they have their money in the
Exactly.
fund,
Yeah, yeah. You
but
you
it's not.
you have to put your own money in the fund. Otherwise, so yes, but it's my own money plus a majority of other people's money. Yeah.
Exactly. So maybe they have put 1%, 2%, whatever the fund size is, maybe more. It's up to them. But I mean, there's their money plus other people money. So for people who think, oh, like this VC, I said, guys, it's not the VC because he has, it's kind of, you're holding the money of other people. Like it's like, of course they trusted you. You have the agreement with them. So just for people in my region who maybe they still don't understand how the VC things work. So just to clarify this. Gabriel, really, I enjoyed the conversation with you today. Finally, traditional question I ask everyone, and it's a cliche question, I know, where people can get in touch and find more about you, and maybe where they can find the podcast as well.
Yeah, well, we're very easy to find online. We're in a lot of places. The places where I'm the most active are X and LinkedIn. So you can
Mhm.
find me on X and LinkedIn, typing my name, Gabriel Jarrosson. And then the podcast, it's called The Lobster Talks, because we're Lobster Capital, so The Lobster Talks. And you can find it on every platform, Spotify, Apple Podcasts, YouTube, everywhere. Yeah, that's me. Thank you so much,
Great.
Mehmet. I had a great time as well.
Great. And again, I want to thank you, Gabriel, for being here with me today. Guys, the links that Gabriel just mentioned, you will find everything, the website, the newsletter, the podcast links, everything will be in the show notes. So you can find that there. And again, thank you, Gabriel. I know how busy it's. By the way, it's a very early morning for you. Just I remembered now on the
Yes.
time of this recording. So it's coming to 5 a.m. for him. It's 5 p.m. for me in Dubai. But anyway, I like early birds like myself. So thank you for joining, Gabriel. This is for the for my audience. If you just discovered this podcast by luck, thank you for passing by. I hope you enjoyed. Give me a favor, subscribe, share it with as many people as you can. We're trying to do something different here. Maybe we are still small, but we need your help. And if you are one of the people who keep coming again and again, thank you very much for your support, for your loyalty. By the way, guys, I'm repeating this at the end of each episode. Since the beginning of 2025, something magical happened. Like 2023, 24, we used to go in the top 200 Apple podcast charts. From now and then, like every 2 months, I see the podcast ranking in one country. This year, since Feb, actually the podcast is always in one of the countries. Like we keep
Wow.
changing positions. Yeah, we keep changing positions, but yeah, we are in one of the countries. So like as the time of this recording, end of November, the last week of November almost. So we are in Lebanon, surprisingly, and we
Wow.
are also we were in Spain last week, and we are in Kenya the week before. So we are in one or two countries every time, sometimes five, six at the same time. Now I have a favor. If you are in the US, please give me a support there. Give me a push. Like I think
Yeah.
out of like all the countries in the world, so and I can see the statistics. You coming guys from the US, so give me a push little bit. I appreciate it. But anyway, thank you for the support. And as I say always, stay tuned for a new episode again very soon. Thank you. Bye bye.
Thank you.
Hit that subscribe button, share the show with your tech savvy friends and fellow entrepreneurs, and leave us a review on your favorite podcast app. Your support means the world to us.